Hello, everyone. Going live again today. Why? Because I love this stuff. Period. I love it. All right. I'm getting on this subject of FHA mortgages because the majority of people get FHA mortgages, and then when they get them, they believe they're homeowners. And I'm here to not, if you're going to do it, go ahead and do it. Not to discourage you from getting one, but I'm going to tell you the mathematical truth about it so it can click with you, so you can understand why conventional mortgages are more difficult to get compared to an FHA mortgage for the exact same house. Make you open your eyes, help you open your eyes to say, wait a minute, how come I can't get this one? Because I need all this money, better credit, blah, blah, blah. But I don't have to have money or have good credit for this mortgage and get the exact same house. It doesn't, help you understand why that is. Bring it together, okay? Let me bring up my notes so you can understand. Because I am getting not upset, but it bothers me when I hear people talk about, especially on financial videos, groups, chat rooms, and Facebook pages of become a homeowner with the FHA mortgage. Let's first start out like this, okay? No mortgage in the world, even a conventional mortgage, makes anyone a homeowner, okay? The only person that is a homeowner, according to math, everything I'm telling you, everything I share with you is verified to be true, 100% to be true with mathematics. The math we learned in 5th grade, okay? Now, first, we need to make a clear understanding that when it comes to business and math, and you start to get feelings about what I'm saying, always remember this. Math and money are one, okay? The only thing that can separate math and money are feelings. And when I say that, I always say this in every video so if you're new to this channel, you can understand. If I ask you, how do you feel about 5 plus 5 equaling 10? 2 plus 2 equaling 4? How does it make you feel? Happy, sad, jump for joy, depressed, make you feel anxious, angry? Ooh. No, it's just 10. It's just 4, right? That's how you should look when I speak to you about FHA mortgages. It's just mathematics, okay? All right, so I'm gonna look at my notes here. FHA mortgages, FHA stands for Federal Housing Administration. This is governed by the government. This is a government-funded program. Who's the government? You are, we are, the taxpayers, okay? We are FHA, okay? Federal Housing Administration, all right? Now, the difference between the reason why, so you can understand this, when you go for a conventional mortgage, that money is loaned to you by the bank and not backed by anything but the person applying for that type of loan, okay? When you go for an FHA loan, it's with the bank, the FHA, the Federal Housing Administration doesn't give you the loan. The bank gives you the loan, but the FHA administration insures that loan just in case if that person defaults on that loan. The FHA administration says, hey, sorry, but here's the money to pay off that loan just in case if the person that got the FHA loan defaults on it, okay? That's why the standards, the credit scores, the low money down is lowered, because they're not gonna lose if you don't pay. You get it? The risk is less for the lender, the bank, all right? Now, if you woke up one day and say, you know what, I'm close to 30, the social world says this is the age I'm supposed to have a house, rent versus mortgage, the rent's the same as mortgage, all that kind of nonsense. And you say, this is the year I'm gonna buy a house. You must first make sure your bank account agrees with you. Okay. You can't just wake up and say, I just want a house. You must make sure your bank account agrees with you. How do you do that? Add up all your savings, add up all your debt. Savings minus debt equals how much money you have for a house. If that number's in the negative, you cannot afford a house. Now, this is all the bank does to determine if you qualify for a house. So if you went and your finances are in the negative, you went to the bank, you said, hey, bank, I want a conventional mortgage. That's all the bank's going to do. It's going to look at your entire credit report, add up all your stuff, and see you're in the negative. They're going to say, sorry, you don't qualify for a mortgage, for a conventional mortgage, right? But then if you don't accept that, they're going to say, oh, okay, this person doesn't get it. Okay, we're going to push them over to an FHA mortgage. But you do qualify for this. Now, you got to stop and think, well, that doesn't make sense. Well, I have no money, but I still qualify for this FHA mortgage. That should be a light. There should be a light coming on in your head to say that something doesn't make sense. All you really have to do is say, hey, bank, can you do a side-by-side comparison between how much I'll be paying for the house with a conventional mortgage and how much I'll be paying with an FHA mortgage, and see the numbers yourself. That's all you really got to do. But if you got house fever and you got everybody in the debt matrix, and for those of you that do not follow my channel, the debt matrix is a place where everybody believes that the debt matrix is a place where people live that believe in credit and debt. They believe financing everything that depreciates, which makes no mathematical sense. And if it doesn't make mathematical sense, it doesn't make financial sense either. But people in the debt matrix, they don't care. Money is spoken in two languages, debt and debt free. If you've been in debt all your life and you believe debt is just a way of life, this is where you live. That is not true. That is a belief. Okay? Savings minus debt will tell you the answer. Get out of the red. If your savings minus debt equals how much money you have in real life. If your finances are in the red, get it from the red to the black, meaning above zero, and you'll be out of the debt matrix. And you'll see everything I'm saying. I'm not saying anything spectacular. I'm just using 5th grade math that they taught in grade school. That's it. Nothing more than that. Okay? All right. So FHA mortgages are designed for people that refuse to believe that they cannot afford a home, that they just refuse to believe it. All right, and so this is how it works. Okay, so you can understand. Though you get turned down and don't qualify for conventional, indirectly the bank is doing you a favor by turning you down for conventional. They're saying you cannot afford a home. So instead of accepting that device, because the banks are here to make money. This is business. It's nothing personal. If you don't know, you don't know. That's your problem, right? They push you to a subprime mortgage, which are for people, again, that will not accept, they cannot afford a home. So this business is designed to make money. So to take your money, that's all it is. If you don't know, oh well, that's your problem. And then you go over here, you get an FHA mortgage, and then you walk away believing you're a homeowner. You're not. You're not a homeowner, and you're far from it, way far from it, but you don't know that, okay? Okay, so how it works is, the bank still gives the loan, but it's insured by I'm pretty sure I said this in there. It's insured by the FHA, which is taxpayer money. So they tack on what's called PMI, private mortgage insurance, or sometimes they move the P to the N. So it's called MIP, mortgage insurance premiums. FHA mortgages usually have what's called a UFMIP, upfront mortgage insurance premiums that are gathered right up front. And then there's another MIP through the life of the loan. This MIP money doesn't go to the bank. It goes into a pool of all the people that are charged for this. So just in case, if this person defaults on this FHA mortgage, they use that money to pay back the bank for the rest of the loan. So the bank gets all the money plus insurance throughout the years that you're staying in this house under the FHA mortgage, all these years. And then when something happens and you default on that mortgage, they kick you out using the MIP money that you've paid, which is, I know you hear the word insurance in it, but it's not insurance for you. It's insurance for the bank, and insurance that the Federal Housing Administration collects Can you imagine how many people got FHA mortgages with MIP? That's billions of dollars, okay? You just paid to get yourself kicked out. You think you're going to stay there a year. You know how you say, oh, well, I'm going to stay here a year. It's going to take them forever to kick me out because they usually stop paying the mortgage first, right? All that MIP you paid is paying to kick you out. And then when you're out, the bank has paid off the remainder of that loan. They cannot lose. That's why they don't care if you come in there with a crappy credit score, no money down, all that stuff. It doesn't matter. Those are all signs that we should tell you that you can't afford this house. If you need to borrow the money for a down payment to put on an FHA mortgage, you cannot afford a house. That should tell you that. But most people refuse to do that, especially people, poor credit scores, no money down, in the red, student loans on their credit report older than their children. Those are all signs that you're not ready, okay? All right, let's see. Low credit score, bad, no money. Okay, here's another thing I cannot stand when I hear people say this to other people that do not understand how this works. Now, you'll get somebody, it's always these people that claim, hey, the rent is the same as the mortgage. You got to be careful of the people that say that because you don't know who that's coming from. Who's saying that? When you hear somebody say that, you must ask yourself, I need to see their credit report because their credit report will tell you why they're saying that. It will tell me everything I need to know. They'll have 9 times out of 10, they'll have an FHA mortgage themselves, collections, old student loans, all that stuff. They'll have all that, right? And then the person selling you the house or some kind of group, you know how they get together all these groups and try to approve a whole bunch of people in a group or whatever, right? They will get you in this group and then they'll say things like this. Hey, you can start out with now you got bad credit, no money. You can start out with the FHA mortgage. You have no money right now and you don't have a mortgage payment, okay? They get you into the FHA mortgage and they say, hey, when the house appreciates up to 20%, and then you can refinance out of that FHA mortgage into a conventional mortgage. Now, I want you to listen close to when somebody says that to you, listen close. This is what they're really saying, because that's not true. That is so not true. You don't have any money right now to not even 20% to put down on this house, but you're going to somehow save the money, up your credit score, along with a new mortgage payment. You're going to somehow refinance out of the FHA into a conventional? No, you're not. You're not. I promise you, you're not. That's so far highly unlikely. When somebody says that to you, I don't care what group says that to you, you ask them, this is all you got to say. What is the percentage of people that actually successfully do that? Okay, ask that question. I know you don't know to ask these questions because if you knew, you wouldn't even touch an FHA mortgage. You would be completely insulted that you're offered that. They should rename FHA mortgage to for high-risk applicants only. Okay, or prepaid foreclosure insurance, because all that PMI you're paying, that's the money that's going to get you kicked out of that house. It's horrible. Don't do that. What else? Let's see. Here's a couple other signs that if you're a person in the debt matrix getting house fever, and you believe, or you are convinced that the only way you're going to be a homeowner is an FHA mortgage, because it sounds, I know the things, the low credit score, little money down, or finance the whole amount. I know that sounds appealing, okay? But those are like, that's just bait to get you into believing the collective of people with FHA mortgages. You ask yourself, whoever's saying this to you, ask them, do they have an FHA mortgage? How long have they had it? Are they paying PMI? Because don't be fooled by this either. If somebody tells you that they got into a house with an FHA mortgage or less than 20% down, and they say they don't have PMI, private mortgage insurance. You ask them, but do you have MIP, mortgage insurance premium? Because people, they're technically saying, yeah, you really don't have PMI because it's renamed to MIP. It's the same thing. So the average person walks away thinking, oh, I'm not paying PMI, but you really are. Two of them. That's totally giving away your money. And can you imagine? Imagine, like, remember the crash? This I want you to pay attention to. You remember the crash of 2008, right? Now, when you just hear on the news, it sounds like, hey, the taxpayers bailed out the banks from all the people defaulting on their mortgages, right? And they're like, oh my God, I can't believe the banks got billions, but yet we paid the taxpayers helped them out. This is what you're not hearing. The majority of people had FHA mortgages, which are insured by who? The government. So when the crash happens, guess what? The taxpayers paid the banks what they already signed up for. They already knew the people that were going to default on those mortgages because they knew when you were going in. Anybody that would accept FHA mortgages are high risk. When you're outside the debt matrix, you wouldn't touch that. That's an insult. I'd rent. I don't care what anybody thinks. I'd rent until I can afford a house, period. Don't ever sign up for an FHA mortgage. But if that's you, this is not here to say, hey, I'm your daddy, don't do that. I want to give you the knowledge before you sign that paperwork. It's not even hard. Just do a couple of extra steps. Say, hey, man, give me a side-by-side comparison between a conventional mortgage and this one. A top conventional mortgage and an FHA mortgage. You'll see for yourself. And even on top of that, that's saying that if you got into an FHA mortgage and never refinanced, not even once, how many people you know refinance several times? If you refinance several times over and over inside of an FHA mortgage, ooh, you're never going to own that house. It really does. It bothers me because they're just taking, what it is they're taking advantage of people with lack of money knowledge. And here it is. It's not even that difficult. You just gotta step outside the debt matrix. And this is how I expose the glitches in the debt matrix. If the math doesn't make sense, that's a glitch. If somebody's telling you rent versus mortgage and you find out they have an FHA mortgage themselves, that's a glitch. They don't know what they're saying. They're in the debt matrix with you. They don't know what they're saying because the math doesn't make sense. And if they have one, ask them, have you ever refinanced your house? What'd you do? Refinance into a conventional, or did you refinance FHA? Oh, I did refinance FHA because I got a lower interest rate or whatever. That's debt matrix speak. Okay. You do this is how you become financially free. The simple formula that I always say throughout my videos, savings minus debt equals how much money you have in real life. If you do everything the opposite of the majority, you will be rich. You will be a millionaire. You will be financially free. What do I mean by that? This is what you do. Google how many people have FHA mortgages. Do the opposite of that. Don't get an FHA mortgage. Google how many people finance cell phones. Do the opposite. Don't finance cell phones. Google how many people have student loans. If you have them, pay them off. If you don't have them, never get them. Google how many people in credit card debt. Google how many people have car loan debt. Do the opposite of everything. All this information's out there. If you do the opposite, you'll be rich. You'll be financially free forever. And people in the debt matrix will have no idea how you're doing it. You know why? Because they believe debt is part of life. It's not. I'm living proof of that. I lived in the debt matrix for 40 years of my life until I woke up. Once I woke up, I was like, holy crap, I could have been a millionaire a long time ago. Don't ever get an FHA mortgage, ever. I don't care what anybody says. And especially from people that are in one right now telling you that you should. They just want you to be just like them. There's some things that they're not telling you. How do you tell? This is how you tell. Say like you know somebody that has a house, okay? These are the questions you can ask without them knowing, okay? How much did you put down on your house? If they say less than 20% of the house, don't listen to them. Ask them, hey, are you paying PMI or MIP? If they turn to you and say, what's that? You better not listen to them. How many times have you refinanced your house? If they say several times, you better not listen to them. Do you understand? See how that works? I'm only speaking mathematics. None of this, what I'm saying, is hidden. None of it is hidden. I had to get back on and just say this to people because I get in finance rooms and I'm on YouTube, and you just type in FHA mortgage videos, man, there's so many people on there just telling you bad information. And they use financial terms so they sound smart. Okay? When all you have to do is do the math, and you will clearly see. And now some of these people, I don't know if they're doing that on purpose to make money, or I don't know if they're doing this because they simply don't know. The only way I can determine if that person's doing it because they don't know, or they're doing it because they're making money, is if I see their personal credit report. It will tell me what I need to know. It'll clearly tell me. Now I know most of you will not understand. You're probably thinking I'm talking credit score. I'm talking about their entire credit report. It will tell me if they're doing it for money or they're doing it because they live in a debt matrix. All right. All right. That's it for today. You guys have a wonderful evening. I am out. Have a good one.